Hi everyone, this is Prashad Parthiban. Today I'm going to take a quick training on excess and surplus lines. By definition, this is the insurance for businesses with high risk or adverse loss history or a kind of unusual coverages. So when I say unusual coverages, if I have a company and it needs some kind of coverages that are like not a common kind of coverage, then you go with excess and surplus. Or high risk, like if I have a business, say oil machinery or somewhere where the possibility of risk is high, then you go to excess and surplus insurance. Or if I started a business just 6 months back, I don't have enough loss history to prove that okay, I am a safe customer, then you go to excess and surplus lines. So long story short, we have something like admitted versus non-admitted. So excess and surplus lines will always come under non-admitted. So in scenarios where admitted carriers decline a submission request for a customer because of all those attributes, like because the customer had some kind of high risk exposure, or there is an adverse loss history, or the risk is unusual, then customer goes towards excess and surplus lines. Again, within this line, we have a separate brokers and agents who are licensed to provide this insurance type. Now, you could have a difference, or you could have asked me what is the difference between excess and surplus versus standard insurance. So if you take a standard insurance like admitted insurer, they need to file their forms, their rates with the Department of Insurance, which means they have to clearly notify the Department of Insurance. These are the coverages that I'm going to provide. This is the rate, this is the premium that I'm going to charge. And in turn, if this particular insurance company becomes solvent, like they are out of business, the Department of Insurance will pay out the claims. So this is a very safe option even for the customers. Whereas in terms of excess and surplus insurance, they don't have a kind of rule or complaints that they need to file their forms and rates to the Department of Insurance. So that is the reason why they can customize their premium based on the individual customer needs, because of the fact these customers are have high risk or unusual risk, or they have adverse loss history. And because they don't file their forms and rates to the Department of Insurance, in case if this customers or this insurance company becomes out of business, then the Department of Insurance will not pay out the claims. So what it means for the customers, whenever you get excess and surplus insurance, you need to find an insurance company which has A+ rating, which means you should be assured that this particular insurance company will never go out of business. The final point I want to insist here is, a lot of people get confused between excess and surplus versus like excess liability or umbrella policy. So excess liability or umbrella policy is a kind of additional liability policies in case if you have general liability policy and your limits are like 100k. That's the maximum limit the insurance company can provide. If you want more limits, then you can go with excess liability or umbrella, and this has nothing to do with excess and surplus lines. And as I told you, that excess liability policies are just an underlying policy for the primary policy to increase just the limits, nothing else. Whereas surplus lines is a unique kind of insurance which caters to the businesses with high loss exposure or adverse loss history or kind of unusual business. I hope you like my training videos. If you like my training videos, please do subscribe to my YouTube channel. Have a great day. Bye-bye.